Hello, everyone. Beautiful morning to you from this part of the world. And how are you doing today? So let's confirm that we are good to go this morning. If you can see my screen and you can hear my voice clearly, please type in hi in the comment section so that we can get this started. I'll really appreciate some feedback, please. Let me know if you can see my screen and you can hear my voice clearly so that we can kickstart the session. Okay, let's see what we have in the comment section. Okay, 904, good morning, thank you very much. 210, good morning. 663, good morning to you, thank you for that confirmation. Hello, Valeric, how are you doing this morning? Hey, Carrie, thank you very much. It's a wonderful morning out here too. All right, 512, thank you very, very much. And I think we are good to go this morning then. I'm so excited to welcome you to another promising session on the Extra and Speed Live. My name is Sharif Daramola, and for the next 1 hour, I will be your host. And I shall be taking you on a trading journey where we shall be evaluating the financial markets using technical parameters to identify trading opportunities ahead of the New York session today. And one thing I'll first of all like to say here that today is going to be a very, very busy day as the much anticipated Federal Reserve announcement is coming up today, which is what everyone in the market has been looking forward to. And in the last couple of weeks, we have been seeing the reflection of this anticipation on the chart as price action. So we are going to be looking into that and looking into how we want to be taking advantage of these opportunities. And before I go any further, I didn't forget you new comments. You're highly welcome. I really appreciate your presence here. And what we simply do here, if you don't know, is that we come here to review the financial market ahead of the New York session. So we try to identify key moments, key structures, key levels that we want to be using to guide our trading activity during the New York session today. And we do this on a daily basis, 10 a.m. UTC, 11 a.m. West African time. And being your first time, it might look a little bit overwhelming to understand, but trust me, with time, you will get to understand how this works and you will be able to use the information you have gathered here to make your individual decisions on your own trade. So once again, you are welcome, and on this note, let's dive right into the business for today. And as usual, the first thing we normally do is to keep tabs with the economic calendar, as we want to look out for high impact macroeconomic events that will definitely be affecting at least the currency pairs that we have been monitoring since the beginning of the week. And since for this week we have a couple of pairs that we are monitoring, so we are going to be looking forward to high impact event that will be affecting the US dollar, the pound sterling, and the Japanese yen. And for today, Wednesday, May 3rd, we have a handful of high impact events, where the first one is coming up in about an hour from now, and that is I think 2 hours from now, I guess, the ADP employment change. And this is released by the automatic data processing, and it is a measure of the change in the number of employed people in the US economy. Generally speaking, a rise in this indicator has a positive implication for consumer spending, stimulating economic growth. So that means that any high reading is seen as positive, or any low reading is seen as negative. And from the previous data here, we have a 145,000, which came in the month of March. And the consensus for the month of April seems quite a little bit higher than the previous data, as we have a consensus projection of 150,000, which is a sign that we might likely be seeing some positive movement in the dollar today if the actual data comes in just as expected or beyond expectation. Then we also have the ISM Services PMI, which is coming up in about 3 to 4 hours from now. And this is released by the Institute for Supply Management, and it shows the business condition in the US manufacturing sector. And a result above 50 is considered to be bullish for the US dollar, and anything below 50 is considered to be negative for the US dollar. And from the previous data here, we have a 51.2, and then we have a consensus projection of 51.8, which is a little bit too on the high side there. That means we're having signs that we might be seeing some bullish traction in the US dollar today, if possible. And then we have the federal interest rate decision, which majority in the market has been looking forward to, actually. And there is the general consensus that we might likely be seeing a 25 basis point rate hike today. So we are going to be looking forward to that one too. And another one that is coming up is the Fed's monetary policy statement. Then we also have the FOMC press conference. These are coming up in about 9 hours from now. And there going to be a press conference where the bank committee will be open to questions and answers from the press. So these are high impact events that we are going to be looking forward to today. And besides this, there are no other high impact event affecting the instruments that we are monitoring for today. So with that being said here, and with the informations we have gathered here, so let's dive right into the chart to look at things from a technical standpoint, and at the same time use the informations we have gathered here to position ourselves ahead of the New York session. So as usual, the first commodity we are going to be looking at this morning is the US oil. And on the US oil, so far so good since the beginning of the week. We have been very, very profitable on this commodity as we continue to sell in the last 48 hours. Now, let's quickly run through how the week started for us on the US oil. And as you can see here at the beginning of the week, we saw that price action had started on a bearish note, though we had a little consolidation phase at the beginning of the week where price action was trapped within the $76.20 level and the $75.75 area to give us an indecision in that market. And you all know what we look out for whenever we have this kind of simple setup. We want to remain patient and wait for price action to either break out of the resistance line for buying opportunity or break down the support line for selling opportunities. And the latter is what happened here as we saw price action break down the support line, hereby triggering our first sell position for the week right below the $75.75 level after price action triggered our sell position. Though we saw price action come back into that entry a couple of times actually, leading into a situation where price action transitioned into a choppy situation, which further emphasized the indecision in this market. This lasted about 24 hours actually. And during our live session yesterday, we were considering the potentials of the buyers in this market after understanding that since the beginning of this week, the $75 area had continued to reject all attempt by the sellers to break down that structure. And as a result of this, we marked that $75 area out, and we said this might likely be a platform upon which a bullish momentum will come in during the New York session yesterday. And in that regard, we anticipated a breakout of the $75.75 area, which also shares a confluence with our bearish trend line. So we had a buy stop order above the structure ahead of the New York session with the hopes that price action will break out of that level, but that did not happen, and instead price action went the other way. And if you remember vividly also, we have this trend line which has been guiding that bullish momentum since the beginning of the week. And we said if price action breaks down that line and the $75 area, then at that point we shall consider selling the US oil. So with a sell stop order below the $75 area here, after the breakdown retest of the trend line happened, I think a couple of hours into the New York session yesterday, we saw the breakdown of that structure, and it was at this point we had our second sell position for the week. And we continue to ride the move all the way to the downside. And remember, we acknowledged the $74 area where we said a breakdown of that structure definitely will be welcoming more opportunities in this market. And as you can see, we had a second position triggered there, and price action continued to the downside, and most of us will have hit our TP target at this point. And between yesterday and today, we have seen price action moved a whooping, I think over 400 now. I think it's about 500 pips now. Over 525 pips in profit at this particular point in time. And if we had the second position here, which started at the $74 area, we have about 430 pips in profit. So we are close to about 1,000 pips in profit on the US oil, as the US oil has at this point in time dropped over 8% to the downside, which is a very, very massive decline in the US oil commodity. So at this point in time, if you still have a sell position running at this point, for those who still have a sell position running, I would advise that you move your stop loss right now to secure the current sell position. And at this point, anywhere above the $70.50 level seems most appropriate to lock in your profit right now. So with that being said, with your profits being secured at this point, what is going to be our next line of action today? And for those who had missed out on this opportunity, do we still have any chance that we could be part of another wave of bearish momentum? Or are we going to be getting ready to buy as we anticipate the high impact event coming up later today? So with that being said here, we want to take a further dissection of the chart by looking at the thing from the higher time frame so that we can have an holistic point of view to really see what has really been going on here and how the structures on the lower time frame is having an impact on the long-term perspective in this market. So in that regard, we shall be scaling back up into the daily time frame, where we want to be seeing things from an holistic point of view and at the same time have an idea of where we are coming from since the beginning of the week. So at the beginning of the week, this was what we were able to spot on the US oil chart on the daily time frame. We acknowledge the fact that price action has been bearish since the month of July last year, giving us this bearish trend line you can see on your screen. As you can see, price action has consistently respected that trend line over the last 8 to 9 months, I guess. Then in the month of November till this present moment, we have seen a situation where price action was trapped within the zone $82 MAC area and the $70 area in the last 6 months, I think. Price has been trapped within that range, giving us a clue that there is an indecision in this market. And at the beginning of this week, we were considering the bearish momentum that we have been witnessing here in the last couple of weeks could be a retracement of that previous impulse leg. Remember, we identified this impulse leg at the beginning of the week, where we said we might likely see price action retrace into our golden zone area in anticipation of another wave of bullish momentum. And in order to project the potential area where the retracement phase could end, what we did here was to use our Fibonacci retracement tool. Then we ran it through the previous impulse leg here. Then we aimed at an area between the 50 and the 78.6%, which happens to be our golden zone area. And at this point, we said all sell positions that we take advantage of, we should be having our TP target anywhere around this area, which is between the $74 area and the $68.50 level. And with a look of things right here, you will see that price action is back within that potential zone that we identified for a potential trend continuation pattern. And currently, price action just broke down that $70 level, which happens to be a very strong support line since the month of November. Now, with the situation of things right now, we are at a critical point in this market where a little bit of patience is hereby required for us to see how to take advantage of positions ourselves ahead of the New York session today, which also we have high impact event that is likely going to be having some major impact in the nature of this current market structure. So at this point in time, we are at a critical point where price action is around the $70 area. So it's important that we really understand how majority in the market is reacting to that $70 mark. Are we going to be seeing a reversal pattern from that area to incite the potential of an opportunity to join a trend continuation from this area to the upside? Or are we going to be seeing a situation where price will drop below the $70 area and continued selling pressure below the structure on our lower time frame could likely send a sell-off signal in this market to send price crashing further to the downside? So these are the things that we are going to be looking at today on the US oil. So in order to have a better perspective into what is going on here, we will need to scale down to a much more lower time frame. Let's start with the 4 hours time frame first of all. Then we scale further down into the 1 hour time frame to have a better perspective into what is really going on. So we shall be zooming right into the 4 hours time frame right now, and this is the 4 hours time frame here. And if you recall, hold on a second please. So if you recall, at the beginning of the week, this was what we were able to spot on the 4 hours time frame, and we went to as far as considering the activity of price action since the beginning of the month of April. And one thing we realized here is that price action has been on a bearish tone. And to further emphasize the strength of the sellers in this market, we saw price action evolve into a descending channel after we connected a series of lower highs and lower lows in this market, which gave us a very uniform descending channel, which we've said we are going to be using to guide our trading activity for this week. So we have the resistance line of the descending channel here, and we also have the support line of the descending channel. And one interesting thing about this whole structure is that during the early hours of today, we finally saw the breakdown of the support line of that descending channel after price action did a little bit of consolidation phase around that area, which lasted about 12 to 16 hours before the breakdown of that structure. And this morning, that gave me personally an opportunity to sell, as I updated this on my public platform, where I was looking out for selling opportunities around that area if the breakdown of the $71.50 level happens. Now, to let you know the importance of the $71.50 level, I want to zoom out a little bit so that we can see how this level has been a major determinant of price action since the month of March. Now, look at what happened here. We saw how this area was initially a demand zone before the breakdown of that structure happened. Then we also saw here in the month of March how this level also was serving as a very strong selling niche in this market. Then we saw the breakout of this level that was at the end of the month of March. We saw the breakout of the structure struck the early days of the month of April, and since then price action had remained above the $71.50 level. Now, with this whole situation we have here, where price action shares a confluence with the support line of that descending channel, we can see that we already have a breakdown of that structure, and we have a sell position running for those who still have a sell position at this point. And at this point, I will be advising that we need to be very, very patient in order to be able to add more position to this existing trade. Now, we all know from a technical standpoint that whenever price action breaks down a key structure just like what we have here, there is a chance that price could still come back to do a retest of either the $71.50 level or the trend line, that is the support line of the descending channel, to incite another wave of bearish momentum to the downside. So at this point in time, we continue to guide our sell position. Extend your TP target to somewhere around the $65 area, which happens to be the lowest point price action has been. Let me show you that in a moment so that we can all be on the same page here. So this is the $64 area, which happened in the month of March. So that was the lowest point. So you could extend your TP target into that area and continue to move your stop loss accordingly to secure your position as we continue to monitor price action at that point. However, we should not ignore the potentials that buyers could come in at any point in time, probably to bring price, retrace price back into the $71.50 level to incite a trend continuation, or probably climb above the $71.50 level back into the resistance line of that descending channel, at least in the meantime, which also shares a confluence with the $74 mark. So these are things that we are going to be looking at when we go into the New York session today. So at this point, we need to be very, very careful, remain patient, and continue to monitor price action at this point. So for those who are still in a sell position, kindly move your stop loss, secure the current position, and let's see if we can identify another structure around here that will help us to be able to take advantage of more trading opportunities. So we have a structure here at the $69.30 level, which I would like to label for the sake of clarity. So let's label it $69.30 level, as you can see here. So bring back our candle chart. You can see how that level had been a major determinant of price action in the month of March. As you can see here, right now price is approaching that structure. So what we are going to be doing right now is to see how price action will be reacting to this level during the New York session today, to see if we are going to be selling. Then we want to see a breakdown retest on our lower time frame to join more sell positions in this market. Remember, our TP target is around the $64 mark, and we want to continue to move our stop loss accordingly as price action moves in our favor. But if price action gets into the $69.30 level, and instead of breaking down that structure, we begin to see buy pressure resume above the $69.30 level during the New York session today, then we want to consider some buying opportunity. So we look out for double bottom structures, reversal patterns, breakout retest of structure, then we can join. Then mind you, this could be a retracement of the impulse leg, so we want to be on standby to be part of this move as price action moves in our favor, as we want to be moving our stop loss accordingly. Now price could come back to retest the trend line or the $71.50 level, so that is why we want to move our stop loss, secure the positions, and wait and see how price action reacts with this level to determine if we are going to be adding more position or getting ready to join another wave of bearish momentum to the downside. So this is how we are going to be trading the US oil for today. At this point in time, if you are not in a sell position right now, I'm advising that you remain patient. Let's wait for new structures to mature, which we have identified a key level at the $69.30 level, which we are going to be using to guide our trading activity today. And depending on how price action reacts to that level, will determine if we are going to be buying or selling the US oil during the New York session today. So let's keep this in mind. Screenshot my screen if you want, so that you can be able to use it as a reference point when you're about to make your individual decision today. If you do have any questions, let me know in the comment section, and I will be checking from time to time while I move on to the next pair. So the next option we are going to be looking at today is the US Tech. And on the US Tech, we also had a very beautiful sell position yesterday, which gave us about, how many pips was that? It gives us a minimum of 150 pips depending on where you got out of that trade. So let's run through what our expectations were during the live session yesterday and what we saw in this market that actually made us to sell the US Tech. Now, at the beginning of the week here, we saw a simple setup which was identified as price action was ranging actually within the $13,290 mark, which happens to be the resistance line for this channel, and that is the highest point price action had ever been this week. Then we also have the support line sitting around between the $13,220 and that key level that we have there at the $13,200 area. And for like 24 hours, we saw the situation where price action was ranging within this whole structure. And you all know what we look out for whenever we have this kind of simple flat channel. We want to see price action either break out of the resistance line for buying opportunities or break down the support line for selling opportunities. Though we had a sell position yesterday, which I told us all to close, and the reason why I said we should close that manually was because of this demand zone we identified at around that $13,200 area. And the reason why that is, we saw that since the beginning of this week, we saw how sellers were finding it difficult to break down the structure. As you can see, every time price drops into that area, we saw how buyers negated all attempt by the sellers to break down that structure. So at that point yesterday, we decided to name that area our temporary demand zone, where we were looking forward to price action might likely continue to the upside to break out of the resistance line at the $13,290 area. And that did not happen, as you can see. Remember, we had a structure that would guide our activities yesterday. As we said, we want to see price action break out of the trend line and the 13,250 level breakout retest on our lower time frame before we want to be joining that move. But as you can see here, that did not happen. Then I told us all yesterday that the only reason why I will be selling the US tech is for price action to break down this demand zone, take out all the sell positions here to trigger a sell for the week. And that was exactly what happened. I think a couple of hours into the New York session yesterday, we saw the breakdown of the demand zone. We saw a couple of retests of structure which triggered this whole situation that we have here. And for those who are taking advantage of this opportunity, well done to you, and kudos for being on standby to catch that move. At least we saw a movement of about 150 pips in our direction before we started witnessing this whole consolidation phase here that started during the later part of the New York session yesterday. Now, if you still have a sell position running at this point, well, I will advise you to ensure that you move your stop loss to secure the current position. And if we look at this whole structure here, the most appropriate area I think will be most suitable to secure this position could be anywhere just right above that 13,160. As you can see, this area has been a very strong supply zone, at least in the last how many hours now? I think about 12 hours now, I guess. We have seen our price action had continued to reject that level. So I will be labeling this area as our supply zone, at least in the meantime. So let's label this area for the sake of clarity. So we have our supply zone figured out inside that. Let's place it inside that box. Beautiful. So we have a supply zone now figured out around that area. And the reason why that is quite obvious, you can see as soon as price gets into the structure, 13,150 area, we saw selling pressure during the later part of the New York session yesterday. We also saw what is happening here in the last 4 or 5 hours in this market. We saw how sellers had continued to negate all attempt by the buyers to break out of that structure. So with this whole situation here, it appears we begin to see a simple setup gradually unfolding before our eyes. And if we take into consideration the impulsive move that brought us to this point, look at what happened here. We saw the impulse leg here. This whole choppy situation here might likely be a retracement of that impulsive move that might lead into another wave of bearish momentum in the direction of the prior leading price action. Now, with this whole situation we have here, it's looking more bearish at this particular point in time, but we cannot ignore the potentials that buyers could still break out of the supply zone, probably a sharp breakout of that structure which wouldn't last long before the second wave of that bearish momentum will happen. And the reason why I am saying this is quite simple. Now, if you look at the impulsive move that started during the New York session yesterday, we saw it break down a very key structure here at a 13,200, which happens to be our key level for the week, which was also serving as a very strong demand zone during the first couple of days of this week. And from a technical standpoint, when price action breaks down a key structure, we still expect it to come back, do a retest of that level to incite that move to the downside. So we are not going to ignore the potentials of buyers bringing price into that 13,200. And one interesting thing about that level also is the fact that it also shares a beautiful confluence with the bearish trend line that has been respected since the beginning of this week. So you can see how we have a confluence around that area, which we are also going to be taking into consideration too. So at this point in time, let me first of all talk about the breakout of the supply zone. Let's talk about the potentials of the buyers around the supply zone there at the 13,135 area. So if at any point in time during the New York session today, price action breaks out of the structure and we start seeing buy pressure above that area, well, for counter trade traders or scalpers, you might want to be part of this move and join the move all the way into the structure. and want to see how price action will react to this level to determine what our next line of action will be. So if selling pressure continues below that level, then definitely price has respected the breakdown of structure to incite another wave to the downside. But if a breakout of the 13,200 level happens, then at this point price action is back within that demand zone, which we have been holding by pressure since the beginning of the week around that area, to now come back into the territory of the buyers. Then at this point, a buy pressure above that level will definitely be welcoming another opportunity to add more position to your existing trade. So for scalpers, you might want to join at the breakout retest of the structure here, but if you are not a scalper or a counter trend trader, I would advise you to stay clear of this kind of position and then wait to see how price action will be reacting to both the trend line here and the $13,200 mark to decide what to do next. So at this point in time, depending on how price action reacts to this level will determine what our next line of action will be. And like I said earlier, a breakout retest of that structure, then at this point you want to be part of a bullish momentum to the upside, as we are already back within the territory of the buyers. However, if selling pressure continues below the 13,200 when we scale down to our lower time frame, where we continue to see failing attempt by the buyers to break above that structure, then at that point we look out for reversal patterns that supports a move to the downside. Then we could actually join that move to the downside. I would like to extend this bullish trend line here a little bit, so it could be one of our parameters that we are going to be using to guide trading activity if price action ever gets into the $13,200 area. So that is how to look out for trading opportunities above the 13,000, above the breakout of the supply zone. However, if price action does not break out of the supply zone and instead we continue to see price action oscillate below the supply zone at the 13,135, then at this point we will see this as a sign that sellers are still strong in this market, and there is a high chance that a momentum could build up based on the supply zone that we have here. And if that is going to be the case, how do we want to be joining the bearish move to the downside? Now, when we look at this whole situation, what I was able to do here this morning was to acknowledge the higher lows, which for me personally is seen as a retracement of the previous bearish impulse leg that brought us to this point. So I connected the higher lows here to give me this trend line, which I will call a temporary trend line here, as we are yet to see an engulfing bullish candle to break out of that supply zone. So if this trend line was going to be our yardstick for trading activity today, so if at any point in time price action breaks down the trend line to the downside, then we are going to be getting ready to join the direction of the prior leading price action, which is bearish at this point. So what I want to see here is a breakdown of the trend line. Price action comes back probably to retest the trend line or the 13,135 level. Selling pressure continues, then I want to be in for the bearish move to the downside. Now, if a further breakdown of this support line at the 13,100 level happens, then we want to be adding more position to our existing trade. So that is how we are going to be selling the US tech for today. And our TP target now will be the next question you will be asking. Of course, we did have our TP target. Remember, we identified a TP target zone on Monday on this platform. So let's run through the 4 hours time frame where we spotted a potential TP target zone, and the reason why we spotted that area I will be explaining to you in a moment. Now look at what we saw here on the 4 hours time frame. We saw this impulsive move last week, which brought price into the 13,290, after which we begin to see selling pressure resume, leading to the situation we saw yesterday that broke down the $13,200 mark. And I told us all yesterday that majority who had bought the US tech at a very cheap price, probably at around the 12,800, will at one point want to be doing some profit taking activity, which will definitely reflect on the chart in the form of a retracement of the impulse leg. Now, in the last 24 hours, we have been seeing something that looks more like a retracement phase, but the question at this point is how far will this retracement phase go before the second wave of the bullish momentum will happen. Now, what we did here to project the potential area where we could be looking out for TP target for sellers and demand zone for buyers, what we did was to bring out our Fibonacci retracement tool, run it through the previous impulse leg, and what we have here was an area between the 50 and the 78.6%, which happens to be our golden zone. And what we said here is that we are going to be having a TP target for sellers around that area, and that area as well is going to be serving as a demand zone if we begin to see reversal pattern evolve on our lower time frame. Then we could join the trend continuation that started last week. Now, with this whole situation we have here, let's keep this in mind. We have an area between the 13,050 and the 12,890 level as a TP target zone in this market. So remember, I told us all on the 1 hour time frame that we are still looking forward to a possible move into the 13,200 before the next wave of bearish momentum happen. And if that is not the case, then we are looking forward to the breakdown of the structure to join the move to the downside. So let's continue to wait out for how this market will evolve on the US tech going into the New York session. Then I told us all that a confirmation of a buy opportunity is above the 13,200 to join a trend continuation to the upside. So I hope this is well stated and clear here. If you have any question, feel free to let me know in the comment section, and trust me, I am ready to re-explain to you to make things a little bit more clearer. So that is that on the US tech, and that is our expectations. So we are going to be moving on to the next pair right now, which is the GBPUSD. And on the GBPUSD, we have a whole situation running here whereby pressure has gradually gained some momentum. So one thing you will notice on the GBPUSD chart is that the bullish traction we have been witnessing across the USD pairs appears to take quite a lot of time before it begins to gain traction on the GBPUSD. As you can see, since the beginning of the week, we have been selling the GBPUSD. Remember, at the beginning of the week, we identified this simple setup here between the 1.2570 area and the 1.25420 level, giving us a little indecision around that area. And you know what we look out for whenever we have this kind of situation. We wait for price action to give us a signal, which is definitely going to be coming either in the form of a breakout or breakdown of that channel. And during our live session on Monday, we already witnessed the breakdown of the support line at the 1.25420, and I told us all that a retest of structure definitely will welcome an opportunity for us to sell. And since then, price action moved over 100 pips in our favor on the first position. And remember, we also had a second position at the breakdown of the 1.25, giving us a close to about 200 pips in that direction, at least during the first couple of days in the week. And one thing I made mention here yesterday during our live session, remember we identified this structure here where we said we are looking out for more selling opportunities to add more position to our existing trade, and that if price action breaks out of the 1.25, we are looking out for buying opportunity, and that if price ever breaks out of the 1.25, it would have also broken out of this bearish trend line that we were able to spot at the beginning of the week. So congrats to everyone who has been part of the bearish move. And with the old situation we have right now, you should be having a buy position running at this point. Personally, for me, I joined actually around this area this morning as I was able to spot this whole situation during the early hours of today. So with a breakout retest of that structure, I was able to join. But this one was part of our discussion yesterday where we said our key level at the 1.2500 area is always going to be our yardstick for buying or selling opportunities, where I laid emphasis on the fact that if price action breaks out of our key level, we are looking out for buying opportunities, and if price action remains below our key level, we'll look out for selling opportunities. So with this situation here, if you had bought and if you had joined this move, you will currently be running with about 13 pips in profit. At this point in time, my advice is that you move your stop loss to break even at this point. Let's secure this current position and wait out and see what will be happening as we all get prepared for the interest rate decision, the ADP employment change, and which other one is that again, and the ISM services PMI. So these are events that we are looking forward to today that will be affecting this pair. So secure this current buy position if you already have a buy position running. And for those who had missed out on this opportunity, well, we already have a breakout of both of a key structure, which is the key level and the bearish trend line here. So we have a breakout of a structure, and from a technical standpoint, whenever price action breaks out of a key structure, we expect that price will still come back and do a retest of that level. So if it does come back and do a retest of that structure, it could still come back, drop below that area a little bit, but most importantly, we want to be seeing a reversal pattern on our lower time frame to be part of the trend continuation to the upside. And mind you, we have this market structure we have on your chart right now as a tendency of giving us multiple entries. And remember, we have a support line here at the beginning of the week at the 1.25420 area, which was initially our support line. So a breakout retest of that level will definitely welcome more buying opportunities in this market. And remember, we also have a structure here at the 1.25700 area, which happens to be the resistance line for this week. That is the highest point price action has ever been for this week. So a breakout retest of that level also will be welcoming more buy position in this market. So with that being said here on this chart, as we are looking out for more buying opportunities, well, we don't want to ignore the potentials of the sellers too as well. So we are also going to take into consideration what happens if sellers come in, and what do we want to see on this chart that will make us realize that at this point the bullish momentum has been negated and that sellers are gradually stepping up the steam to take over this market. So what are we going to be seeing that will give us that confidence to sell? Now, if you look at this whole structure here and consider what has been happening in the last 24 hours, you would have noticed that we have been witnessing a higher low and higher high in this market, giving us a clue into the traction of the buyers in this market, which has led to the breakout of the bearish trend line you can see on your screen. And you all know, whenever we start seeing higher lows, what we want to do is to connect the series of higher lows to give us a sense of direction of how price action has been moving in the last 24 hours. So when we connect the series of higher lows, we have a trend line here, which definitely is going to be serving as one of the parameters that we shall be using to guide our trading activity for today. So let's do some readjustment here after bringing back the candle chart. So we have something like this. And with the whole situation we have here, so as long as price action remains above this bullish trend line, we will feel comfortable in our buy positions, while we look out for more opportunities to add more position to our existing trade. But if at any point in time price action breaks down this trend line, then at this point we are going to be considering selling. And if you look at the structure closely, a breakdown of that bullish trend line would have also broken down our key level for this week, which is sitting at the 1.2500 area. So if at the site of the breakdown of the structure, we are going to be getting ready to sell. And as soon as the breakdown of that structure happens, we are going to be scaling down into a much more lower time frame, like our 10, 5 or 15 minutes time frame, to look out for a retest of structure at any point, giving us sign that buyers are finding it difficult to climb back above the structure. So we might likely see a retest of the trend line broken, a retest of the 1.25, or a retest of this bearish trend line, which has been supporting this bearish momentum since the later part of last week. Then we could join the decline to the downside. Then a further breakdown of the 1.24840 will welcome more sell position in this market. Then we also have a structure here at the 1.24500, another strong psychological level, where the breakdown retest of this level also will be welcoming more selling opportunities. So these are the scenarios we are going to be looking at on the GBPUSD for today. So we still have our key level serving as a major determinant of price action, as a breakdown retest of our key level at the 1.25 would have broken down the bullish trend line, giving us a sign that the trend line may no longer have the capacity to negate the bearish attempt in this market, now giving us a signal that we might be having a momentum shift. And like I said, we are looking forward to the FOMC. The interest rate decision is generally expected to be increased by 25 basis point rate point hike. And if there's a risk, an increase in the rate, then definitely this is going to be affecting the dollar, as the cost of credit facility will now increase, and majority will stay clear of borrowing, and majority will want to save or invest in the dollar. And because of a high interest rate, everyone will want to save the dollar, invest in the dollar, buy the dollar, and this might likely lead to a huge traction in the dollar and leading into the breakdown of the 1.25 level to incite a massive move to the downside. Anything that happens prior to this, any breakout of any of the structures that we are going to be discussing on the USD pairs today, is going to be a very massive move to either side. So my advice is that we remain on standby, wait for structures to mature so that we can be part of that move. We don't want to miss that move that is going to be happening today. So let's be on standby. You might want to screenshot my chart so that you can use it as a reference point when you're about to make your individual decision. So that is that on the GBPUSD. So moving on right now, we are going to be going into the XAUUSD, which is another pair that gave us a massive profit yesterday, as we were able to scoop over 200 pips there, about close to 300 pips on the XAUUSD in the last 24 hours. So let's go into the details of what made us buy the XAUUSD this week. So remember, at the beginning of the week, we acknowledged the fact that price action was sitting on a very strong demand zone. Let me share with you what happened on the 4 hours time frame, what we saw on the 4 hours time frame, which increased our buyers in the direction of a bullish momentum. So this is the 4 hours time frame right here, and the first thing you will notice is that price action has been finding lower highs in this market, and we actually acknowledge the lower highs here by connecting the series of these lower highs to give us this bearish trend line you can see on your screen. And the next thing that will come to your mind is, oh, the market is bearish. But if you look closely, you will see that it's not really that bearish per se, and the reason why that is simply because of the attempts by the buyers around the 1,970, 1,975 area. You can see here that price action was unable to find a lower low despite the lower highs it has been finding since the beginning of the month of April rather. And we saw that as soon as price gets into this area, every attempt by the sellers to break down the structure has been met with strong resistance from the buyers. And this was a clue that there is a lot of accumulation going on around that area, as majority are accumulating to push price to the upside. And one thing we noticed at the beginning of the week was the breakout of this trend line, which actually gave us about 100 pips thereabout. We saw the breakout of the structure. Remember, we had our key level at the 1,990, and you all know what we do with our key levels. Our key levels gives us signs on how to take advantage of a position. If price action remains above the key level, buy pressure there gives us an opportunity to buy, and if price action remains below the key level, selling pressure on our lower time frame gives us an opportunity to sell. So with a breakout of both the key level and the trend line here, it was a sign for us that we might be going bullish this week. So we saw the breakout of structure, and this followed a technical expectation. We saw price came back to retest. Then we saw this buy pressure resume, which lasted about 18 hours in this market. This was spotted during our live session yesterday. So how will we going back down into the 1 hour time frame where we spotted this old structure? And here we are on the 1 hour time frame. I think I did this on the 15 minutes time frame, where I was able to spot a simple setup which we were supposed to use on Tuesday to guide our trading activity. Okay, here we go. This is the structure we identified yesterday, and we said we are going to be using it to guide our trading activity. So what we spotted on the 15 minutes time frame was quite interesting here, as we saw this $5 range between the 1,985 and the 1,980. And for the fact that price action is sitting on a very strong demand zone, which I showed you on the 4 hours time frame, it is reasonable to look out for buying opportunities. And in that regard, I told us all yesterday that we are going to be having a buy stop order above the 1,985 so that we can be part of that move when it finally happens. And interesting enough, I think a couple of hours into the New York session yesterday, we saw the breakout retest of that structure, as you can see. So if you had missed out on this opportunity, the market came back to retest the structure and boom, it went all the way to the upside. Then we also had the privilege of adding more position. I told us all yesterday that we have the 1990 level as an area to look out for more opportunities to add more position to our existing trade. So at minimum, you have at least 2 positions running, and as you can see here, price action hits the TB target we projected yesterday with I think about 500 pips on the both positions here as price action hits that TB target. And personally, we also had another opportunity to add more positions at the breakout retest of the $2005 mark. And in fact, if you are taking advantage of that opportunity as well, well done to you for being on standby to have caught that move, as you will currently be running with 110 pips in profit on this third position. So if you still have your position running right now, kudos to you, well done. And the next thing you want to be doing right now is to secure the current position. And the only way we can do that is by moving our stop loss accordingly, to an area which I have spotted here below the $2012 area. Anywhere below the structure seems most appropriate to secure the current buy position we are in right now. We want to give room for price action to breathe. Now, with that being said, and with our position secured right now, what is going to be our next line of action for today? Now, if you look at this whole structure here following the bullish move that we witnessed yesterday, you can see here that as soon as price got into the $2019.50 level, we saw our sellers came in to negate the buying pressure in this market, which is a sign that we might likely be seeing a retracement anytime soon. And if we take a closer look at what is happening from a higher time frame, and considering the impulsive move that started yesterday, you would agree with me that the potential of price going through a retracement phase is still very, very possible. And considering the fact that we are expecting an interest rate hike today, which is going to be increased by 25 basis points, it might likely favor the dollar in such a way that price action will drop. People will drop the gold to buy the dollar in this market. So this might result into some profit-taking activities, which could probably incite a sell-off in this market. And if that is going to be happening, we want to be on standby to catch that move. So we are going to be talking about how we are going to take advantage of that move when we scale back down into the 1 hour time frame. Then another thing about this whole structure is that following the impulsive move we saw here yesterday, the whole consolidation phase we have been witnessing here in the last 15-16 hours in this market could also transition into a trend continuation pattern where a breakout of the resistance line at the $2019.50 level could incite a trend continuation to the upside. So we are going to be taking these two perspectives into consideration too as well. So in that regard, and with the information we have gathered here on the 4 hours time frame, let's scale back down into the 1 hour time frame and make a decision for today. So to help us make a decision for today, I've been able to identify a simple setup which we are definitely going to be using to guide our trading activity today. So we have a beautiful channel here, price action trading within the range in the last 18 hours between the $2019 $2012, that's like a $7 range. And though we are within a range, but one thing you will notice here is that despite being in a range, we have a situation that looks where price action is finding higher lows in this market, but yet to find a higher high. And because there is a higher low in this market, we want to connect the series of higher lows, which has given us this bullish trend line you can see on your screen right now. Now, in addition to this trend line is this key level at the $2015 mark, which has been a major determinant of price action in the last 18 hours, as you can see here. So I have a key level here. So what we are going to be doing here, how are we going to be using this structure to guide our trading activity? So one thing you will notice here in the last 12 hours, I guess, you will see that price action, since it climbed above $2015 area, it has remained above that structure. So sellers are finding it difficult to break down that structure, hereby giving us a clue that buyers might likely push price and break out of that $2019.50 level that we've identified here. So in that regard, I'm having a buy stop order above the $2019.50 level, just right above that structure so that we can catch that move. And then we could have a stop loss sitting somewhere around or below the $2015 level, which will dovetail to about a 40-45 pip stop loss in that regard. So let's see how price action plays out if the $2015 level continues to hold the buy pressure in this market. So that is what we are looking forward to buy the XAUUSD for today. Now that we are going to be looking at this, we are going to also take into consideration the potentials of the sellers. And like I showed you earlier on the 4 hours time frame, the potentials of sellers coming in to incite a retracement phase, which is likely going to be a profit-taking activity in this market, is also a possible feature on this chart. Now, what do we want to see on this chart that will give us an inclination that sellers are now coming in to stay in this market? For me, at this juncture in the market, I would rather see price action drop below the $2012 mark, taking out the buy positions here within that support line of the channel, selling pressures below the structure my lower time frame. I will have a sell stop order there anyways, sell stop order. And if at any point retest of structure happen, then I will be looking out for more opportunities to sell. Now you will be asking me that what happens before price gets to that structure? What happens? Can't we join even before price gets into that area so that we can maximize the profit by taking part with of this 43 pips move to the downside? Well, we can also take advantage of that move, but we will need something significant to confirm that sellers are actually strong enough to break down the $2012 mark. Now, to see a confirmation that will give us that insight, we want to see price break down below the 2015. And when I mean break down and close below that structure. As you can see in the last 12 hours, you can see price is here to break down that structure at its close exactly on the $2015 mark. So at this point in time, I want to see price close below that structure, and I want to scale down to my lower time frame to see selling pressure below this trend line and the 2015 to give me a confirmation that buyers are finding it difficult to climb back to the upside. And if that is going to be the case here, then I want to join, have a sell stop order below the 2012. Then we have maximized the potential of this sell position in this market. So let's see how this plays out in the next couple of hours. Screenshot my screen if you want so that you can use it as a reference point when you're about to make your individual decision. So that is that on the XAUUSD. So I will be moving on to the last pair for today, which is the USDJPY, which is another pair that made us some profit yesterday, as currently we have over 300 pips running in profit at this point. So here we are on the USDJPY, and since yesterday in the last 24 hours we have been selling the USDJPY. And remember, we had a buy position running yesterday, and I told us all that we should secure the buy position by moving our stop loss anywhere below the 137.300 level, which I hope you did. And also remember that we were using this bullish trend line as our yardstick for trading activity ahead of the New York session yesterday, where we agreed that if price action remains above the bullish trend line, we continue to look out for buying opportunities, and if a breakdown retest of the trend line happens, we look out for selling opportunities. And to help us identify a sell potential in this market if price action breaks down the trend line, I was able to identify this 137.530 level here, which was an area I said we shall be looking out for selling opportunities. And look at what happened just a couple of hours into the New York session. We saw the breakdown, retest of structure with a sell stop order below the 137.300. We had a sell position triggered, and we had the privilege of adding more positions to our existing trade. Remember, we had structures like the 137.00, 136.200 areas as areas we want to be using to add more position to our existing trade. And if I scale up into the 4 hours time frame, you can see that price action is currently within our TP target zone. So With the situation we have here right now, if I scale up into the 4 hours time frame, this was what we were able to spot at the beginning of the week. And we emphasized this whole situation here yesterday that for those who had bought the USDJPY at a very cheap price at the 134.00 area, will at one point want to be doing some profit taking activities, which would reflect on the chart if price action ever breaks down this bullish trend line, which was exactly what happened yesterday. And we said if a breakdown of that structure happens, we are likely going to be seeing a retracement phase. And to project where the retracement phase will end, we used our Fibonacci retracement tool. We ran it through the previous impulse leg here and aimed at an area between the 50 and the 78.6% of the previous impulse leg, which is going to be serving as our golden zone area. And we all agreed here that this area is going to be our TP target for sellers and another potential demand zone if we begin to see buy pressure anywhere around that area, and buy pressure around that area will confirm that the retracement phase has ended and I want to get ready for the second wave of the bullish momentum. Now look at what has been happening here. Price action is right within the TP target zone, so some of us will have taken our profits anyways from this market, and for those who have not taken their profits, I have told you earlier, kindly move your stop loss, secure the current sell position while we wait out and see how price action will be reacting to the structure. Now in the last 5-6 hours right now, we can see that price action is right around that TP target zone we identified earlier. So is it going to start the reversal pattern here, or is it going to drop a little further into the 135 area before we start seeing buy pressure that will incite the second wave of the bullish momentum? Now look at, we have a structure here at the 135.00 area, which was broken on Friday last week. Remember, we had the breakout of the structure, and you all know from a technical standpoint, when price action breaks out a key structure like this, we expect that price will still come back to do a retest of that level, where the appearance of buy pressure above the structure or around this level on our lower time frame will get us ready to be part of a trend continuation to the upside. So at this point in time, we need to be very, very patient. We could still see a sharp rejection of either the 135 or this bullish trend line, which has been supporting the bullish momentum in the last couple of weeks, to incite the trend continuation to the upside. But one most important thing we want to be seeing here is a double bottom structure, head and shoulder pattern, and a reversal pattern you can think of. Have your neckline identified, breakout retest of the neckline, then we can join the bullish move to the upside. And I'm of the opinion that, like I said earlier, since we are going to be, the general consensus is that there is going to be a 25 basis point rate hike today, and if that is going to be the case, I think it's going to be affecting the dollar, as majority will want to invest in the dollar at this point, as the cost of credit facility will be higher. Majority, and a rate hike always welcomes saving culture, saving activities, and because of this, we might likely see a lot of people put their funds in the dollar because of the rate hike. And as a result of this, we are within a very critical point in the market right now, where any buy pressure notice around this area should give us the red flag to get ready to buy the USDJPY. But if the contrary happens instead and price action drops below the 135.00 area, well, if it drops below the 135.00 area, then we still remain patient to see, because it could be a false breakdown. So we want to see some confirmation that it is truly a breakdown by waiting for a retest of the 135.00 level to happen. Selling pressure continues. We see signs that buyers are finding it difficult to climb above the 135.00 area. Then at this point, we can be thinking of adding more sell position to our existing trade. So this is how we are going to be trading the USDJPY for today, and at this point I am going to be calling it a day right here, and I'm confident that we are all equipped at this point in time to be able to take advantage of any potential trading opportunities on the instruments that we have treated for today. So today we talked about the US tech, we talked about the US oil commodity, we talked about the gold, we talked about the USDJPY, the GBPUSD. So we had 5 financial instruments today giving us a wide range of opportunities to be able to take advantage of any trading opportunity during the New York session today. And please note that we have a handful of high impact macroeconomic event today. So if you are in any positions, ensure you use your stop loss. Move your stop loss accordingly, lock in some profit, and let's wait to see how the positions evolve. Wait for price action to mature, let it form, give you confirmations, then we want to be joining this move to the upside or downside, whichever case it may be. So I wish you best of luck during the New York session today. And for the newcomers in the house, I hope you are able to gain one or two things from what we discussed here today. And I trust me, the more time you spend with us, the better you become, and you will be able to independently make your own decision based on the information you have gathered here. So stay tuned again tomorrow, same time, 10 a.m. UTC, 11 a.m. West African time, as we come back here again to review how well the pairs that we are monitoring so far this week has been doing, and then get ready for the New York session tomorrow too. So do have a wonderful evening, everyone, and I wish you best of luck during the New York session today. And on this note, bye bye.